Have you ever stopped to think about the smells and tastes that just fill your day? Like the soap you use, your toothpaste, even your laundry detergent.
Right, it's this whole hidden world, isn't it?
Exactly. There's this, well, pretty fascinating industry behind all those sensory experiences.
It really is. And these aren't just, generic things. They're specialized chemicals, aroma and flavor chemicals, made by a pretty sophisticated global industry.
And that's what we're diving into today. We're looking at one of the big players, Privi Speciality Chemicals Ltd.
Yep.
And we've got a great source for this, a really detailed research report from just recently, August 6th, 2025. It digs into their Q1 results for FY26 and, importantly, their strategy going forward.
Yeah, so our goal here is basically to pull out the key takeaways from that report for you, give you a kind of shortcut to understanding what's driving growth in this very specific chemical sector.
It's a really interesting space.
Definitely. We want to show you how a company focused on something like aroma chemicals is actually riding this big wave of innovation and market demand.
Okay, let's jump in then, because Privi really has had a strong start to their financial year. FY26 is looking good for them.
Undeniably strong, yeah.
When you look at the main numbers in this report, what really stands out?
Well, the growth is pretty striking, just the scale of it. Consolidated revenue from operations hit of 559 crore.
Which is about, what, $67 million US?
Roughly,
Yeah.
for international listeners. And that's a solid 20.4% increase year over year. But it's not just the top line. Their profit numbers are really taking off.
Yeah, the report mentions their EBITDA. That jumped, what, over 40%?
40.4% year over year, yeah.
Yep.
Up to 132 crore. And the margins improved quite a bit, too, from about 20% to nearly 24%.
23.7%, yeah. And the profit after tax, the PIT, that almost doubled.
It did. An amazing 97.1% jump year over year, hitting 62 crore. PAT margins went from like 6.7% up to almost 11%, 10.9%.
Wow. Okay, so what's behind that? How do you get that kind of bottom line improvement? It's pretty dramatic.
Well, it's not just one thing, The report points to strong demand, both here and in export markets. Plus, they had a good product mix, and they've clearly been making gains in operational efficiency.
Right.
And they seem pretty resilient, even with all the macro ups and downs. A lot of that seems to be down to their backward integration.
So controlling more of their own supply chain, from raw materials onward.
Exactly. That gives them better cost control, quality control.
Yeah.
And they're also focusing on process innovation, always tweaking things.
That makes a lot of sense. Build that resilience internally. And it's not just that they're earning more, it's how efficiently, right? The report mentions capital efficiency improving too.
Yeah, that's a key point. Their ROCE, return on capital employed, that went up 500 basis points.
So 5 full percentage points.
Right, up to 18.2%. And ROE, return on equity, that jumped even more, 670 basis points to 19.6%.
So how'd they manage that? Better capital efficiency like that doesn't just happen.
Well, the report puts it down to better working capital management and getting more operational leverage. Basically, they're squeezing more profit out of every rupee or dollar invested. It's a good sign of a well-managed company.
Okay, so a well-run ship. Let's talk about the market itself. Their core business is supplying ingredients for everyday things, right? FMCG stuff.
Yeah. Soaps, deodorants, toothpaste, detergents. Things people buy regularly.
What does that mean for their demand? Is it pretty stable?
Incredibly stable, yeah. Because these are essentials, pretty much. People keep buying soap and toothpaste even when money's tight. So it shields them from the worst of economic cycles. It gives them, pretty good visibility on demand.
That stability must be nice. And the report says something like 70% of their business for FY26 is already contracted.
That's right. Already locked in. That gives them real peace of mind, planning-wise.
Okay, so stability is great. Contracts are great. But where's the growth coming from? Beyond just maintaining things.
Well, one really interesting driver is this premiumization trend, especially in Asia. India and China are big examples.
Premiumization. You mean people wanting fancier versions of everyday stuff?
Sort of, yeah. It's more about consumers willing to pay for, better experiences, maybe specific scents, things that express their identity, even in basic products. It's not just utility anymore.
Right.
And that directly feeds demand for the kind of specialty chemicals Privi makes, especially for fine fragrances and, customized sensory profiles.
Makes sense.
And the company actually sees India growing faster than the global average for them, like 8 to 10% a year, which is pretty significant.
Definitely sounds like a big opportunity. So, okay, steady base demand, this premium trend adding growth. What strategic moves are Privi making to capture all that?
Well, one big one is their joint venture with Givaudan. It's called Prigiv.
Givaudan, the Swiss flavor and fragrance giant.
That's the one. This JV is focused on really high-value proprietary molecules, stuff for fine fragrances, high-end taste applications.
Cutting-edge stuff.
Exactly. It's still early days, ramping up, not quite at break-even yet, but they do have one product commercially approved already and a few more being evaluated. Ththese things take time, though. The global qualification protocols are really stringent.
I bet. So what's the timeline look like for this Privi JV? When might it start making a real difference?
They're expecting a faster ramp-up in the second half of this fiscal year, FY26, and then meaningful contributions probably starting from FY27 as more products get the green light.
Okay.
And they're already talking about more expansion phases for it, so it's clearly a long-term strategic play. Importantly, they're also talking with Givaudan about getting low-cost debt financing for the next phases. That would help their overall margins and keep the innovation going.
Interesting. Okay, so that's the JV. What else? The report mentioned something about amalgamation, merging internal companies.
Yeah, they merged two of their wholly owned subsidiaries, Privi Fine Sciences and Privi Biotechnologies, into the main company, Privi Speciality Chemicals Ltd.
Right. Why do that? What's the goal?
It's mostly about simplifying the structure, making operations more efficient, and getting, synergies between different parts of the business.
Makes sense. And what did those subsidiaries bring? Privi Fine Sciences, for example.
PSCL, yeah, they're strong in green chemistry. Molecules like cyclopentanol. The key thing there is green, using renewable feedstocks, plant-based stuff, not petrochemical.
Sustainability angle.
Exactly. Big deal for their clients, especially in pharma and electronics, and it's often a more efficient process, too.
And the other one, Privi Biotechnologies, PBPL.
They bring the biotech expertise, using fermentation, think like brewing, but making complex aroma ingredients instead of beer, using specific microbes.
Wow, okay. So high-tech stuff.
Very much so. It allows for really precise, often more sustainable ways to make specific scent molecules. And management stress, they've built up significant IP here. Patents are expected soon. So merging them should speed up getting these innovations to market and hopefully boost margins.
Integrating science for efficiency.
Correct.
Clever. And supporting all this growth. There are some big spending plans, right? CapEx?
Yep, big plans. The roadmap is for about 1,100 crore in capital expenditure. It lines up with their, what they call their 5K1K vision.
Which is?
5,000 crore in revenue and 1,000 crore in EBITDA within the next 5 years. Ambitious stuff.
Definitely. And how's that spending rolling out?
Well, phase one of their brownfield expansion that's expanding existing sites is about €280, 300 crore. It's partly done, should start contributing this quarter, Q2 FY26, and be fully up and running by Q4.
And what does that phase involve? Just more capacity?
Capacity, yeah, but also debottlenecking, removing choke points in existing lines, and converting some batch processes to continuous manufacturing, which is usually more efficient.
Okay. And I guess they're also investing in those new green chemistry and biotech areas they just merged in.
Absolutely. Money's going into Privi Fine Sciences to scale up those renewable and biotech products. Lots of them are still at pilot or early commercial stages, so this investment is crucial to realizing that 5K1K vision. It positions them right at the front of sustainable chemical production.
So a lot happening strategically. Strong Q1, JVs, mergers, big CapEx. What does it all add up to for the outlook? What's the guidance for the rest of FY26?
Well, they've stuck to their guidance of about 20% revenue growth for the full year, which is pretty healthy.
And margins.
They expect EBITDA margins to stay strong, above that 20% mark.
What gives them that confidence?
It's a combination of things. Continued strong demand, the new capacity coming online, selling more high-value products, those manufacturing efficiencies we talked about, the backward integration helping with costs, even savings on utilities, apparently. It's quite a few levers they're pulling.
Okay, and gross margins. Any change expected there?
They see those staying pretty steady in the 48 to 50% range. They're getting better at extracting value from byproducts, turning waste streams into something sellable, and just optimizing raw material use. It all points to consistent efficiency.
Right. And the analysts who wrote this report, they seem pretty positive too.
They are. They kept their BUI rating on the stock and actually raised their target price to 3,000.
Which is, what, about a 30% upside from where it was trading?
Around 2,300?
Yeah, about that. Their confidence comes from seeing Privi's execute well and believing these strong margins are sustainable. They actually bumped up their own estimates for Privi's revenue and profit for FY26 and FY27.
It really feels like looking at Privi gives you a window into broader trends, doesn't it?
Absolutely.
It's not just about this one company's results. It shows you how innovation, sustainability, changing consumer tastes, how all that plays out in the specialty chemicals world. Yeah, it really highlights how having a clear strategy and executing well operationally can drive real growth, even in these quite niche industries that most people don't think about much.
It's a great example of a company positioning itself smartly to benefit from these, like you said, almost invisible needs and global shifts, turning complex chemistry into solid profit.
Precisely.
So this deep dive has really pulled back the curtain on an industry that's literally shaping our world through scent and taste every day, even if we don't notice it. We've seen Privi's strong performance recently and their, well, pretty ambitious plans for the future.
It does make you realize how integrated these aroma chemicals are in just our daily lives,
Yeah,
almost invisibly part of the background.
exactly. And we've seen how Privi is strategically set up to capitalize on those invisible needs and trends, which leads to a final thought. What other seemingly invisible industries or ingredients do you think might hold similar untapped potential, shaping our world in ways we rarely even consider?